Good morning, everyone, and welcome to Greenstone's SECR webinar. So this is a brief webinar on the new Streamlined Energy and Carbon Reporting Regulations. What we'll be covering in the seminar today is what is the SECR, then a bit on who needs to comply, what you'll need to report, our top 5 tips for SECR reporting, and then we'll end with how Greenstone can help you with your reporting. So just a quick note on Q&A. As this is a short webinar, we won't have time at the end for Q&A, but you can submit questions through the GoToWebinar question function, which you can now see on the screen. And then we'll get back to you. Each question we'll reply to individually. Okay, so what is the SECR? SECR is the UK government's regulations that aim to simplify mandatory carbon and energy reporting requirements for companies based in the UK. And it's introduced as part of the government's green growth strategy. From April the 1st, 2019, the new regulations will come in force. They build on existing mandatory greenhouse gas emissions reporting frameworks, complementing the Energy Savings Opportunity Scheme and replacing the CRC Energy Efficiency Scheme, which is in its final phase. Who needs to comply? The businesses who will need to comply with the new regulations are quoted companies. So quoted companies are UK registered with an equity share capital officially listed on the main market of the London Stock Exchange or in a European Economic Area state, or admitted to dealing on either the New York Stock Exchange or the NASDAQ. This is the same group of companies who are already required to report under the mandatory greenhouse gas reporting requirements. So it's around 1,200 companies. Also under SECR, large limited liability partnerships be covered. These will probably be carrying out energy audits under the requirements of the ESOS regulations, and they're also likely to have been required to report under the CRC. And then finally, UK registered large unquoted companies. This refers to companies who fulfill at least 2 of the following conditions in the financial year for which they're reporting. So they have a balance sheet total greater than £18 million. They have an annual turnover greater than £36 million, and or they have at least 250 employees. It's estimated that the SECR will apply to around 11,900 companies across the UK. So that compares to around 4,000 businesses that needed to respond to the CRC and around the 1,200 who are already required to report under the mandatory greenhouse gas reporting requirements. So what will companies need to report? The reporting requirements differ slightly for quoted companies and unquoted companies and LLPs. Both will need to report their energy use from electricity, fuel, and transport. For quoted companies, this will cover their global energy use. And for unquoted companies and LLPs, this will be limited to their UK energy use. Then associated with these energy uses, all companies will need to report their Scope 1 and Scope 2 emissions. And Scope 3 will remain voluntary, although companies are encouraged as best practice to report their Scope 3 emissions. Previous year's emissions will be required, except for the first year of reporting. And an intensity metric needs to be included. This is in order to express companies' emissions as a ratio against at least one other quantifiable factor. The metric can be decided by the reporting company, allowing them to use intensity metrics that are specific to their business. So some examples we provided might be floor area, units of production, or number of employees. In addition, all reporting businesses are required to provide a narrative commentary on the energy efficiency actions taken in the previous financial year. And companies will also need to state the methodologies that they use to calculate their emissions. Again, the government aren't being prescriptive here on which methodologies they use. They just want companies to explain how they've done so. So what does this mean for quoted companies? Well, there's not going to be a great deal of change, as they're already required to disclose their global scope 1 and 2 emissions and use an intensity metric in their annual reports. But the regulations do expand out to those other companies. And it means that all companies will be required to provide that narrative on energy efficiency. The guidance stipulates that reporting only needs to be done where it's practical. And qualifying companies will need to report in their director's report or an equivalent section contained within their annual report. So, our top 5 tips for SECR reporting. Firstly, to confirm that you need to report and then understand the scope of reporting. So we recommend that you check the guidance thoroughly to confirm that you are covered by it and you are needing to report. Then also review the sections specifically around reporting boundaries. So this is particularly important for companies with global operations and groups of companies or subsidiaries. Then to understand the scope of the reporting requirements in terms of which energy uses you need to report against and which scopes of emissions. Second top tip, perform a gap analysis. So compare your current reporting to the SECR requirements and see how you're doing against them. Highlight areas that are missing or highlight areas for improvement. Think about which intensity metrics you currently use or which intensity metrics you could use. And then think about going beyond compliance and reporting your scope 3 emissions as well as your scope 1 and 2. Third top tip, plan your data collection. So know where your data needs to come from, as in which sites, which offices, which countries, which regions. Contact the data managers. Schedule for regular collection and verification of the data, and communicate reporting deadlines and key milestones internally. Then collate data on energy efficiency improvements throughout the year to assist with your narrative reporting. Fourth top tip, calculations and data management. Ensure you have a robust methodology in place for your emissions calculations, including up-to-date emissions factors and covering both scopes 1 and 2 data sources. But also, if you want to go beyond compliance and report scope 3, make sure your methodology covers those as well. Put processes in place for data management and storing, and consider using carbon reporting software to help handle these processes and carry out your calculations. And finally, the fifth top tip, quality review prior to submission. So check for variances in the data. You can compare data on a month-by-month basis or compare data from one period to the same period in a previous year. Any glaring anomalies should be addressed before you report. Set a strategy for data coverage and accuracy. So making sure that you have data from across the organization and making sure that that data is accurate and up to date. Compare data to previous years for trend analysis, and also compare against industry benchmarks to see how you're performing. The use of your intensity metrics will help in that comparison. And then lastly, achieve sign-off from senior management before submitting your report. So how can Greenstone help you with your SECR compliance? Our team of sustainability experts can help to interpret the SECR guidance and determine whether or not you need to comply, outlining the scope of your reporting. We can then formulate a plan for data collection and reporting and plan for continual improvement for your data coverage and accuracy. We offer a bureau service for many diverse global organizations covering their data collection and management. This helps to ensure that all data is collected efficiently, providing a clear audit trail and checking the data for errors and anomalies. This leads to gradual improvement in your data and your reporting. Through our sustainability reporting software, you can convert energy consumption data from a range of different activities, covering electricity, fuel, transport use, for example, into GHG emissions. And this is drawing from our database of international emissions factors, which are updated regularly. Via dashboards and reports, our software provides the flexibility to report by different emission scopes, including scope 3. It gives you the opportunity to include intensity metrics, such as floor area, units of production, employee numbers, which help to further analyze your data and also achieve compliance with the SECR. And then through our award-winning initiative savings module, you can track energy efficiency from your projects, reporting across your portfolio, helping to meet the SECR requirements for your narrative reporting. So that just about wraps up our introduction to the SECR. As stated in the start, any questions, you can either submit them via the GoToMeeting, or you could email us at info@greenstoneplus.com. Many thanks for listening. Bye.